Hello, this video is looking at task 5 of DAIF, the Drafting and Interpreting Financial Statements unit at level 4. This is the big statement of financial position, the consolidated one, so 30-mark question. Very important that you are able to do these. So here is the question. So the summarized statements can be accessed here. If that's going to be helpful, I'm not sure yet. Note the following: you don't have to use the working tables to achieve full marks, but data there will be taken into account. So I recommend that we use it. So here's our pro forma. Here are our workings. I think I will use it here actually, it's going to be handy. So I'm going to do my usual approach, which is to work my way down the accounts that have been given to me, putting all of the figures somewhere. So they're either going to go into a working or they're going to go into my answer. Now, obviously, I can't sort of write a bracket here because it's on a computer screen, but I can add up as I go and then adjust those figures if I need to. All right, so I've got my calculator at the ready. Right, so let's begin. So the investment in Elegant. So let's just look at the names. So we've got Breeze and we've got Elegant. So the investment in Elegant, that is going to be a debit in my Goodwill account. I'm also, by the way, doing 3T accounts on a rough piece of paper. I prefer to put things as debits and credits, but we can try to put things straight into these workings as well. So the consideration, 800, that's like a debit in my Goodwill account. Property, plant and equipment. So I want 100% of these. So 3572 plus 684 is 4256, which I'm going to put in here for the time being. I know I might have to adjust it later, but never mind. Right, inventories. I want 396 plus 202. So I'm putting 598 straight into my answer. Trade receivables, 294 plus 121. So I'm putting 415 straight into my answer. Cash and cash equivalents, I've got 150 plus 33. So 183 is going straight into my answer. I forgot to look and see what the percentage was in this question. Here we are, 60%, right? So hold that thought. In fact, I'm going to write it on my piece of paper, 60% in this question. Right, so where was I up to going through? So I got as far as putting all these into the answer. So now I come to my equity. So I know that the share capital of the parent is also the share capital of the group. So I can put that 4,000 straight in there, and I actually know that one's not going to change. I then come to the share capital of the subsidiary. This is acquired in return for the goodwill. So for now, I'm going to put that 600 in there, and I'm going to put that in as part of the net assets acquired. I know I'm going to have to change that. That's a credit to my goodwill. So actually, I should have put a minus sign in there. It appears you can't edit this very easily. So if you don't put the minus sign in, you have to go like that. Right, so we've got that 600 in there. Right, retained earnings. I'm going to put the 628 into my retained earnings working. I'm also putting that in as a credit in my T account on my piece of paper. That is the Breeze, which is the parent company's retained earnings. I'm then doing my little tree diagram for this 150. So I've got 150 that is split between pre and post acquisition reserves. So coming down here, I can see retained earnings at the date of acquisition was 100,000. So I'm splitting my 150, 100 pre and 50 post. And then I'm going to split my 50% further, 60% for the group. So 60% of 50 is 30. And that means the non-controlling interest of my post-AC reserves must be 20. I've drawn that in a little tree diagram. So I'm now going to put those numbers where they belong. So the 100, which is my pre-AC reserves figure, that is being credited to my Goodwill account. So that actually means that that 600 shouldn't be 600, it should be 700. So I'm just having to update that on this working. I've got it as well on my T account so I can see it more clearly what's going on. I've then got to put my 30, which is my group share of the post-acquisition reserves. So let's see what my post-AC profits attributable to Breeze. So I'm going to put 30 in there. There is no non-controlling interest working, but on my piece of paper, I'm going to put the 20 as a credit into non-controlling interest. And what I could do is in my equity section here, I could pop that 20 in there now so that I just remember that I've got to deal with that. And I'll put everything somewhere. So I've dealt with that 150 now, right? So I've got 100 of it in my Goodwill account, I've got 30 of it in my retained earnings, and I've got 20 of it in my non-controlling interest. Okay, long-term loans. So I'm just going to add these together. 274 plus 186 is 460. So let's put that full figure in there. Trade payables, we do the same. So 268 plus 94 is 362. And the tax liability is 52. So I'll pop that in there. Okay, there we go. So where am I up to? Have I put everything in? Have I missed anything? But I think I've put all my figures that aren't totals or subtotals in now. So I can now turn my attention to the extra information. So Breeze PLC acquired 60%. Yes, I know. They paid 800,000. Yes, I know. I've put that into Goodwill already. At that date, they had issued share capital of 600. Yes, I know. And retained earnings of 100. Right, so I've dealt with all of that already. This next bit, I haven't. The fair value of the non-current assets on that date was 200 more than the carrying amount. Right, so we now need to deal with this 200,000. So what that means is that the PPE, property, plant and equipment, is actually 200 bigger than I've got in there at the moment. So if I add 200 on here, there should be 4456, not 4256. So if I backspace there, it lets me change that number to 4456. Right, so what I've done there is I've effectively debited my property, plant and equipment. The other thing that I have to do with that is increase the net assets acquired by that 200,000. I've got a brain like a sieve. It is 200,000, isn't it? Let's just check. Yeah, 200,000. So I now need to change this net assets acquired figure to be 900. Right, and on my Goodwill T account, I've got the 600, the 100, and the 200 all shown separately, but that all equals the net assets acquired that's in this Goodwill working of 900. I'll show you my T accounts at the end with my workings, just so you can have a look if you need to. Right, so having done that, I am now going to remember to do my transfer, if you like, from Goodwill. Oh, it's telling me I've got 75 minutes left on the clock. My net assets acquired. I need to recognise that I didn't actually get 100% of all of these in return for my 800. I got 60%. So what I'm doing now is I'm working out what is 40%, so the bit that doesn't belong to the group. So 40% of that 900 is 360. And that 360 is effectively being debited to Goodwill and credited to my non-controlling interest. So I've written that in my T accounts, debit the Goodwill and credit the non-controlling interest. What should that say? Non-controlling interest. Right, so I've got a Goodwill figure now of 260 that I've calculated. So let's carry on. So I've dealt with that fair value adjustment. So what's this next point? During the year, Breeze PLC, that's the parent, sold some of its inventory to Elegant for 70,000. The goods had cost 54. Right, so 70 take away 54 is 16. That is the pretend profit in the group from this transaction. However, only 1/4 of these goods are still in inventory at the end of the year. So that means 1/4 of 16, which is 4, is my PUP, my provision for unrealized profit. So what do I do about that? Well, I go to my inventories, and I know at the moment my inventories are overstated by this 4. So I'm going to do 598 subtract 4. So backspace, and I want that now to be 594. 598 take away 4 gives me 594 as my inventories figure. Right, so I've effectively credited my inventories with that 594 to make the number smaller. I then have to deal with the debit. So the debit, because the parent has sold to the subsidiary, I want to reduce the profits of the group by this 4. So my retained earnings figure is going to need to be reduced by this 4. So what are my choices of what to say? Best one out of these is going to be consolidation adjustment. And that's going to be -4. I'm reducing my retained earnings figure. Now, incidentally, if the subsidiary had been selling to the parent, we would have to have split that for 60% to the parent and 40% to the non-controlling interest. Right? But it's not the case here because the parent, Breeze, has sold to Elegant. So we make that adjustment -4 to the retained earnings. Okay, so I've dealt with that PUP, the provision for unrealized profit. So I'm down to here. There were no intercompany balances. Right. If there had been, I would have to have gone to my trade receivables and subtract the figure, and to my trade payables and subtract the figure. There's nothing to do in this example. Breeze has decided non-controlling interest will be valued at their proportionate share of net assets. That is a bog standard sentence. It just means do it how you know. There is no other option. And finally, the directors have determined Goodwill was not impaired. So remember, with acquired Goodwill, there has to be an annual impairment review undertaken. If there was deemed to be impairment, it would have reduced the Goodwill figure. So we would have had another subtract to do on the Goodwill working. and it would have reduced our retained earnings. So there would have been another subtract to do here as well, but we've got no impairment in this example. There's another couple of workings here, so let's just fill them in for good measure as well. So the consolidated PPE prior to adjustment, I don't know if you remember, but it was 4256, and then we added on that 200 for the fair value adjustment. And then the consolidated inventories prior to any adjustment, we had 598, and we have subtracted 4. So we could have done it there instead. I didn't realise those workings were there, to be frank. So that's why I did it the way I showed you. So armed with that, so we've got 260 for goodwill, 654 for retained earnings. We've got 4456 and 594. They should already be in. So let's go back up to our consolidated statement of financial position and let's fill it in. So goodwill, we've got 260 that comes from that working. We've got the PPE figure 4456. We had already adjusted. It now agrees to the working. Inventories, we had already adjusted, which now also agrees to the working. Share capital, we've got the 4,000. Retained earnings we need to fill in, which is 654 from this working. Right, non-controlling interest. At the moment, I've got the 20 in there. When I made that transfer, do you remember when I did that transfer from Goodwill, I put 360 here as a debit in the Goodwill account, which needed also to have been credited to non-controlling interest. I've got that in front of me in my little T account working. So I am just going to update that non-controlling interest to 380. I don't know why they don't give us a working for that one. Okay, so that's that bit. Everything else is filled in. So it's all added up for me. So 5908, 5908. Happy days. I have completed the consolidated statement of financial position. Right, so if I stop sharing that with you for a second, and I'm just going to show you my piece of paper. So they are my workings at the bottom. The goodwill, retained earnings and non-controlling interest. This is what my workings would look like in an exam, and you can see here as well is my little tree diagram for the retained earnings of the subsidiary. And that's it.